90% of the edges traders chase are already dying by the time they find them. There's no holy grail strategy, no fixed set of rules that prints money forever. And once you understand why, you stop wasting years looking for one. Quick note before we start. This is educational commentary, not personalized financial advice. I run trades as examples of a process, not as recommendations for you. With that said, let's talk about the single most expensive belief in retail trading. Here's the wrong mental model almost everyone starts with. You think of an edge like a machine. You build it once, you flip it on, and it pays you on autopilot. So when a strategy stops working, you assume you broke it, you tweaked a setting, you skipped a signal, you got emotional. That belief keeps you rebuilding the same dead machine. The truth is colder. The machine didn't break. The market changed around it. Let's make this concrete with the simplest possible case. Imagine you find a real, genuine edge tomorrow. Say a specific setup on SPY that historically won 58% of the time with even payoffs. On paper, that's a gold mine. But an edge is just a price discrepancy, a place where the market is paying more than the risk is worth. And a discrepancy is a thing other people can also see. Now watch what happens. You take the trade. It works. Someone else notices the same pattern. They take it too. A fund builds an algorithm around it. Every one of those orders pushes the price toward fair value before the move can happen. The very act of harvesting the edge is what destroys it. This is the core idea of the whole video. You don't own an edge, you rent it, and the rent goes up as more people move in. This isn't a theory I made up. It has a name in academic finance post-publication decay. Researchers studied hundreds of documented market anomalies and found that after a strategy is published, its returns drop by roughly a third to half. The edge doesn't vanish because the math was wrong. It shrinks because publishing it invited the crowd. Discovery is the beginning of decay, not the beginning of profit. You've watched this happen in real time. Think about the meme stock and zero-day options frenzy of 2021. Early on, a handful of traders exploited gamma squeezes and cheap same-day options that were genuinely mispriced. It worked spectacularly for a window. Then everyone piled in, market makers adjusted their hedging, spreads widened, and the easy version of that trade evaporated. The pattern is always the same: discovery crowding decay. Fast edges die fastest because they're the easiest to copy. So the first myth to bury is that a losing streak means you found the wrong strategy. Not necessarily. Every strategy has losing streaks baked in. A 58% edge still loses 4, 5, 6 times in a row on a normal week. The dangerous move is abandoning a live edge during noise or clinging to a dead one out of hope. The skill isn't picking the perfect system. The skill is telling decay apart from variance. Here's how a disciplined trader tells them apart. Variance is random, wins and losses scattered around your expected win rate, no pattern to when the strategy underperforms. Decay is structural, the losses cluster. The average size of your winners quietly shrinks, and the setup that used to fill instantly now gets worse prices. You track this on purpose. You log expected value per trade over rolling windows. When the trend bends down and stays down, that's not bad luck. That's the rent going up. Now the payoff, because if every specific edge decays, what actually persists? 3 things do, and none of them are a secret setup. The first is risk discipline. Position sizing that keeps you in the game through a drawdown isn't a strategy. It's the thing that lets you survive long enough to have a strategy. A trader who risks 1% per trade can be wrong 10 times in a row and still have 90% of their capital. A trader risking 20% is one bad week from zero. The second thing that persists is adaptability, treating strategies as disposable and your process as permanent. The professional doesn't marry one setup. They run a portfolio of small edges, expect each to fade, and are always testing the next one. Think of it like fishing spots. Any single spot gets fished out. The skill that lasts is knowing how to read the water and move, not defending one dead pond because it fed you last year. The third thing that persists is structural advantage, edges that come from who you are, not from a pattern anyone can copy. Lower fees, faster execution. The patience to hold when others are forced to sell. A tax or time horizon advantage a big fund can't use. These don't decay from crowding because they're not a public signal, they're a permanent feature of your position. That's why boring things like low costs and emotional control outlast every clever indicator. So here's what a disciplined trader actually does with all this. You stop searching for the one system and start building a factory that produces edges and retires them. You size every trade so no single decay can hurt you. You measure your expected value in rolling windows so you spot fading early instead of hoping. And you invest in the advantages that compound: costs, execution, temperament. because those are the only things the crowd can't take from you. Notice this idea reaches way past trading. A viral business tactic stops working once every competitor copies it. A job skill loses its premium once everyone has it. Anywhere returns come from being early or being different, crowding erodes the return. The people who stay ahead aren't the ones with the permanent trick. They're the ones who assume every trick is temporary and keep moving. So the durable handle to carry to your screen is this. You don't own an edge, you rent it, and discipline is the only thing that compounds. Chase perfect systems and you'll spend years rebuilding dead machines. Build survival and adaptability and you'll still be trading when the next edge shows up. If that reframed how you think about your strategy, subscribe. Paragon Signals is about signal, not hype, and this is the kind of thinking we do every week. Trade the process. Let the edges come and go.